Before we talk about the housing market slowdown, we need to talk about Zillow. Because today, Zillow isn't just a website. It's the heartbeat monitor of American real estate. Over 200 million people visit Zillow every month. Buyers, sellers, renters, investors, even people who simply like to dream. Zillow turned the housing market into something visible, trackable, constantly watched. It changed the way we think about home values by introducing something new, a constantly updating estimate of what your home is worth. For many Americans, that number became more than data. It became emotional, a reflection of wealth, progress, security. And as Zillow grew, so did its influence. So when the CEO of Zillow speaks about the future of housing, the entire real estate world listens. Recently, the CEO of Zillow issued a warning. The housing market across the United States is slowing and may remain slow for some time. Not a crash, not panic, but a gradual cooling. A market where homes take longer to sell, buyers hesitate, sellers wait, and uncertainty hangs in the air. And here's the key. This slowdown isn't happening everywhere evenly. But there's one state where it's impossible to ignore. California, the place where real estate once felt unstoppable. For years, California defied economic gravity. Prices rose faster. Competition burned hotter. Wealth concentrated deeper. And to many people, it looked permanent. But the rules of economics always return, even to the Golden State. And today, the slowdown Zillow is warning about can be seen most clearly right here. Zillow isn't a bank. It doesn't control interest rates. It doesn't set prices. But it sees something almost no one else does. Massive amounts of real-time housing data. Search trends, buyer behavior, listing performance. Pricing shifts before they ever hit the news. If fewer people click on listings, Zillow sees it. If homes sit longer on the market, Zillow measures it. If price cuts increase, Zillow tracks it. And when that much data starts flashing yellow, people pay attention. How we got here? Interest rates rise. Payments increase. Affordability shrinks. Buyers pause. Sellers hesitate. And the market drifts into limbo, especially in high-priced states, especially in California. Real estate slowdowns rarely announce themselves overnight. They creep in quietly. An open house gets fewer visitors. A listing sits 1 week longer than expected. Then another. Then another. Conversations change. Confidence fades. And suddenly, the frenzy doesn't feel like frenzy anymore. This is what Zillow's data is capturing. A market gently pressing the brakes. To understand why California feels a slowdown so intensely, we need to go back. Back to the days when the market surged to historic highs. When bidding wars became normal, when homes felt like guaranteed investments, and confidence felt endless. This is where the story truly begins. The Zillow CEO didn't predict collapse. He predicted calm, a cooling market, a pause, and maybe this slowdown isn't the end of California real estate. Maybe it's the beginning of a new chapter. California, the housing story continues. And in the coming years, the California housing market will be shaped by mortgage rates, wages, construction policy, remote work, population shifts, investor behavior. But one truth remains. California still represents the dream. A dream that's evolving. A dream that now requires patience, strategy, and resilience. What happens next matters. Because housing isn't just an economic indicator. It's the foundation for families, stability, community, life. California's story is bigger than prices and charts. It's about identity, about opportunity, about who gets to call this state home. So the question is simple. Will California home prices crash? Experts say, probably not like 2008. Reasons: limited housing supply, strict zoning, strong long-term demand, global appeal. But a slowdown? That's already happening. Homes are taking longer to sell. Price growth has cooled, and uncertainty rules the market. Which brings us back to Zillow CEO's warning. The market may stay slow until mortgage rates meaningfully fall, or the economy resets. One of the most dramatic shifts in recent years. More residents are moving out of California than moving in. High prices, high taxes, remote work. People chase affordability elsewhere, to Texas, Arizona, Nevada, Florida, and beyond. And when demand changes, the market changes. But even with migration, California remains one of the most desirable and constrained housing markets in the world. Another force shaping California real estate? Investors. During the boom, institutional buyers and cash investors poured into the market, betting on endless demand. But as the slowdown spreads, many are stepping back. Some hold their properties. Some wait on the sidelines. Some quietly exit. Meanwhile, everyday buyers compete not only with prices, but with history. Real estate doesn't exist in isolation. It reflects the economy around it. And California's economy, the largest in the United States, is evolving. When the economy tightens, housing reacts. And in a state where prices were already some of the highest in the world, even small shifts can create big waves. Here's the paradox shaping California real estate. Sellers don't want to move because moving means trading a 3% mortgage for 7%. Buyers don't want to buy because payments are already stretched to the limit. So instead of a crash, the market becomes stuck. Lower sales, fewer moves, a market in slow motion. Behind the statistics are real people, young families who still dream of owning a home, but find themselves locked out. Longtime residents wondering if now is the moment to sell, or if they've already missed the peak. Investors evaluating risk in a market that no longer guarantees endless appreciation. And then there are renters, watching housing costs rise even as the market cools, unsure whether buying will ever be within reach. For many Californians, the housing slowdown doesn't feel like relief. It feels like uncertainty. California became ground zero for this slowdown. Homes stayed on the market longer. Price cuts became more common. Inventory rose, but not enough to stabilize affordability. Across major California metro areas, listings that once attracted multiple offers now wait weeks, even months, for a single serious buyer. Real estate agents describe the market in one word: quiet. The era of explosive bidding wars? Fading. The era of cautious buyers? Beginning. The turning point came when interest rates surged. To fight inflation, the Federal Reserve raised rates at the fastest pace in decades. Mortgage costs doubled, almost overnight. What once looked affordable suddenly wasn't. And in California, where the median home price is dramatically higher than the national average, the pain hit harder than almost anywhere else. That's when the CEO of Zillow issued his warning. The housing market was slowing and would likely remain slow as both buyers and sellers stepped back. Because here's the problem. Sellers don't want to give up their ultra-low mortgage rates. Buyers can't afford the new ones. And so the market freezes. Then came the pandemic. Interest rates crashed. People left apartments for bigger homes. Tech workers went remote. California saw bidding wars unlike anything in history. Offers far above asking price. Homes sold in days, sometimes hours. It was a frenzy, and many believed it would never end. But markets always change. And in the background, the conditions for a slowdown were quietly forming. To understand the slowdown, we need to rewind. For years, California real estate operated by a different set of rules. Limited supply, explosive demand, a tech-powered economy minting millionaires overnight. It didn't matter whether you were in San Francisco, San Diego, Sacramento, or deep inland suburbs. Prices soared almost everywhere. Homes weren't just places to live. They became investment vehicles, retirement plans, financial security. If you own property in California, you were winning. This is the story of how one of the hottest real estate markets in the world suddenly hit the brakes. The CEO of Zillow, one of the most powerful voices in American real estate, has issued a warning. The U.S. housing market is slowing, and nowhere is that shift more visible than right here in California. California, the Golden State, a place built on dreams, from Hollywood lights to Silicon Valley innovation to endless suburbs stretching under the Pacific sun. For decades, California real estate wasn't just expensive. It was unstoppable. a marketplace where home prices seem to climb forever, defying logic, gravity, and the financial reality of most Americans. But now, something has changed.